Hello, and welcome to my retirement roadmap. This is the final video in the series on investments or portfolios, and we are going to talk a little bit about fees. But first, I want to talk about what's the stock market, because you hear that like you hear the news or friends will talk or for whatever reason you're hearing the stock market went up or down or it's not doing well, that sort of thing. But what is the stock market? First of all, I want to distinguish the Dow. I want to talk a little bit about that. We'll go down nostalgia. We'll be a little nostalgic. I'll say that for a second. Because it used to be way back, in the 70s and 80s, it was all about the Dow. And the Dow is the 30 blue chip companies and they even move in and out of the Dow. They get selected to be part of the Dow, and then they think, oh, we no longer want you. They kick you out. They put something else in. So that's the Dow Jones Industrial Average. It's interesting, definitely interesting, but it is not the total stock market, and it doesn't follow the total stock market. So we typically, when we hear about the stock market moving one way or the other, we are pretty much talking about the total U.S. stock market. But it might be also discussing the S&P 500 or some smaller subset of companies. Because for example, in the S&P 500, they're really, right now, they're really I think there's 7 or 8 stocks that really are moving the stock market up and down. That's really what's happening. Those are, for example, NVIDIA is the big one, right? So that's what we're talking about for the total stock market, either the S&P 500 or some broader version of publicly traded equities. For example, ITOT, which is one total U.S. stock market, it's roughly like 3,000 companies in it compared to the S&P 500. But the total U.S. stock market indexes follow very closely to the S&P 500. They're pretty identical, all things being equal. I like the total U.S. stock market just because I feel like psychologically, maybe the next NVIDIA is sitting down there and is going to spring into action. But it's not part of the 500, but it might be number one in the future, that sort of thing. So that's what I kind of like. I like the total U.S. stock market, but the S&P 500 is fine as well. I don't see any issues with that. But anyway, I did want to clarify that. I mentioned earlier that the ETFs of ITOT, SCHB, and VTI, those are the 3 discount brokerages. You can find those easily there. Those are just examples, not recommendations. Now I want to talk specifically about expenses and investment expense, because this is super important, and I think a lot of this kind of gets brushed under the rug as we do investments. There are different types of fees for investing, and also you can pay commissions. I think the most important part, the message that I'm trying to get across, is make sure you know what you're paying for your investments. And especially if you have an investment manager, okay, I think it's a good idea to know how much you are spending to have that investment manager handle your investments. It's important. And some of and this is a whole different topic area, but I'll just introduce it a little bit. But it's not uncommon for people with relative, I shouldn't say relative, but smaller investable assets. Okay, it used to be like $500,000 or less. You'd pay 1% to your investment advisor for managing that. So you just need to know how much you're paying for that. Okay, I think is super important. And I know myself, that was one of the reasons why I got into this business myself, because I was through my own arrogance and pride, I suppose. It's like, I'm not paying somebody that much money to manage my investments. I will figure it out myself. That's my stubbornness. And I think it's paid off. And I've learned, I very much enjoy doing this and helping educate people along the way. Anyway, do make sure, and when you get your statement, sometimes you're like, it's hard to distinguish what the fees are. And if you don't know, ask your advisor, say, how much am I paying you for managing my investments? I think that's a fair question. So let's go back just a little bit and talk about the ITOTSCHB VTI. Those are the total stock market ETFs that I keep talking about. And they charge right now 3 basis points. Now, what is a basis point? Because this is, it took me forever to figure this out. But a basis point, so it takes 100 basis points to make 1%. So when we're talking about 3 basis points, okay, we're talking about, I guess that's it's 3/100ths of a percent. Okay. So it's basically to get to a percent, that's roughly 33 times 3, right? To get to 1%. So you can see those are very inexpensive when you're looking at investments that are charging, or when you're paying 1% for something. So again, and we go back to our Boglehead style of investing. You really want to keep costs extremely low. So that's good if you're paying 3 basis points. Then I'm shouting out another one, just giving an example that the VXUS is a Vanguard Total International Stock Market Index Fund, ETF. Okay, ETF, and it's at 5 basis points. So it's a little more expensive than 3, not quite double the price, but still quite reasonable. Okay, so I think that's important to know as well. As opposed to some other investments, you can get into some fancy funds that they're charging 40 basis points, even higher. Long story short, make sure you know how much your investments are. And if you take a look at your statement, you can go look them up easily on the internet, and you can find out what the expense ratios are for those funds. And you might say, wow, I am paying a lot of money for this. Is it really worth it? Something to consider there. Okay. Then I want to circle back and talk just a little bit about tips. Love tips. That I've gone on too much about tips, I suppose. But the reality is with tips, you're buying the bond. There is no expense ratio. Okay. What you're paying, the fee that you're paying for those really is the difference between how much you buy the tips in, and how much you could immediately turn around and sell it for. That spread. That's really the cost of buying a tip. And then you hold it to maturity. And so there's no 3 basis points a year or whatever. So if you've got a tip that matures in 7 years, you're just paying the difference between the bid ask price once. And that's it. No more expense. Okay. So, and the same, it's similar, I guess, a little bit in the if we go back to envelope 1 and we're talking about cash in a brokerage firm, in a money market, in a brokerage firm where we're storing our cash like investment, you can see how much like the 7-day yield is, and that really should translate into how much you're actually going to get. There is no fee on top of it. There are expenses, but they're already subtracted before they give you that 7-day yield. So it's not very much money at all. We're following that Boglehead's investment advice there of keeping costs extremely low. So at the end of the day, if you follow this portfolio that's being recommended here and keeping things simple, and all you have is a total stock market fund or TUO maybe, and you have your tips, really you just have to take what you're paying for those total stock market funds, the expenses you're paying on those, and you can divide that into your total investment portfolio, and that will tell you the fees that you're paying on that. It's truly that simple, and that's what we're all about, is keeping things simple. So I hope this has helped on investing. Definitely some good advice here, I believe, and I think it is helpful for people to at least take a look at this and see if this fits into their style. Thank you so much, and we'll see you in other videos in the future.